As most of you know by now, I'm a contrarian trader. I like to buy things when everyone else is bearish. When they want to give them away, I want to take it. And I like to sell things when everyone is wildly bullish. So when they want to buy at any price, that's when I want to give them my shares. So back here in May, as we were putting in this bottom, this is when I was bullish. Of course, everybody else at the time was bearish. All they could see was, um, more and more losses, even though we had a very nice cup and handle pattern in play. Most people during this multi-week decline became convinced that gold had nowhere to go but down. So, they were selling when they should have been buying. On the other hand, this is what I look for in bottoms, is despondency. When everyone else is selling, that's when I want to be buying. That is when we bought. Now we've got the exact opposite situation. Now everybody is convinced that something has fundamentally changed and that gold can only go up for the foreseeable future. It's never going to correct again. And so at this point, I'm more inclined to be selling rather than buying or continuing to hold my position. And we are 17 weeks at this point, 17 weeks into this rally. If people can stay rational, set their emotions aside, 17 weeks is a time to be getting nervous, not terribly bullish, especially if you consider how far prices stretched above this moving average. It doesn't mean that gold couldn't still have some more upside left. That's the problem with being a contrarian. You're often a little early. If one had bought a little early right here, then it would look like you were wrong, and price would continue down. But you're not wrong. You're just a little bit early. Same thing here. If you sell your position a little bit early, and price continues to go up for another week or so, it looks like you're wrong, but really you're not wrong at this point. At 17 weeks into an intermediate cycle, now is not the time to be giving in to these wildly bullish stories on gold. Now's the time to start being cautious, and maybe you want to think about trimming, taking profits, or at least significantly tightening up your stops. If gold forms a weekly swing next week, that would be week 18, and that's late enough in the cycle to where a weekly swing is probably an indication that we've got an intermediate top. Moving on to silver, I was hoping that silver would make it all the way up to test the baby bull high. Let me expand this chart just a bit. All right, there we go. I was kind of hoping that silver would come up here and test this baby bull high. It may just come up a little bit short. Back here a week or so ago, I was seeing a lot of analysts calling a top in silver. We had a resistance zone here. We have another one here, another one here. And I said at the time, silver hasn't given us that big explosive phase yet. That usually happens at the very tail end of an intermediate cycle. So it was still too early to call a top in silver. 1 or 2 weeks ago, we need to have that explosive phase in silver. Well, we definitely got it this week. We may be If gold is topping, then silver probably doesn't have a lot of uh, much more room to rally. It's still possible it could get up here and test the baby bull highs, but uh, at 17 weeks, we've produced an explosive rally. May still have a few days left to go. They usually tend to run about 7 to 14 days, and we're a little short at only 5 days, I think. So silver may still have a little further to go, but again, um, we've done everything that we need to do here. We've had a very very nice rally. It's lasted many weeks. We've gone through multiple resistance zones, and at this point we have now completed the qualification for an explosive phase. Even though it may still have a little bit further to go, you've got to temper your enthusiasm at this point, and um, you know, again, I'll say it again. When everybody else wants it, that's when I want to give it to them. When everybody wants to give it away, that's when I want to take it. I wanted to take it down here. Now that everybody is, switched and is, you know, gone from ultra bearish here to ultra bullish here, now is the time I want to give them my silver. Uh, so, um, this is why I use cycles. It lets me know when I should be bullish when everybody else is bearish, and when I should start to be bearish when everybody else is bullish. And I think we've hit that point now where most everybody else is bullish, and it's probably time to start getting bearish on the metals. As I've said many times in the past, I like to buy when things are oversold. This is the weekly chart and the weekly stochastic, so I like to be a buyer down here when things are oversold, and I like to be a seller when price is overbought. Now this is exactly the opposite to the way most emotional traders trade. They're fearful down here. They don't want to buy. Once prices had a big rally and were overbought, this is when they become confident that the trend is going to remain up for the foreseeable future, and this is where you get a lot of chasers that get caught at top. So I want to be a seller when price is overbought, and I want to be a buyer when price is oversold. And we are going to, at some point, price is going to come back down and get oversold again. These emotions will reverse. Everybody will become despondent and bearish again, and that's where I want to be a buyer is once the weekly stochastics cycle back down here to oversold, and they will. They always do. You can see there's never been a time in history where the market didn't oscillate back and forth from overbought to oversold. Right now we're overbought. We will be oversold again. And that will be the spot where you want to be buying the metals again.